Let's talk about how to pay less taxes with an LLP. So here's a bonus I want to give you right off the bat. So there are some tax benefits of a limited liability partnership, okay? And the thing is that it's really important to understand that since the creation of the limited liability partnership business structure option, the LLP business structure option, it has been very popular, especially with business professionals such as lawyers and architects for that matter. And while in some states such as Texas, the LLP structure doesn't offer the same level of liability protection as an LLC, it does provide the same tax advantages, okay? Now let's talk about the choice of tax selection here. And the thing is that for all intents and purposes, the IRS does not recognize LLC as a tax classification, so LLC business owners need to determine if they will be taxed as a sole proprietor, partnership, or corporation. And partnerships are not eligible to operate as sole proprietors. Instead, they can decide if they want to be taxed as an S corporation or C corporation. And members of the S corporation generally draw a salary from the company, and their taxes are paid on their personal income tax form 1040, as in any traditional job. C corporations are generally large, publicly held companies that file business tax returns, so that's form 1120. So what about pass-through taxes? So LLPs are allowed to pass their profits or losses to their individual tax return. So for the small business, this is simpler and requires actually less paperwork than filing as a corporation. And partnerships in which members want to pay their business taxes on their individual tax returns need to file Form 1065 and Schedule K1, okay? Well, when we talk about paying less taxes with an LLP, you got to also pay attention to special allocations, because generally partnerships split profit and losses based on the proportion of ownership of the members. So it's one of those things where it's either that or as specified in the partnership agreement, okay? And it's important to understand that partnerships are also allowed to change the percentage of how the profits and losses are split through a special allocation. So it's one of those things where you got to really sit with a lawyer to really understand why you want to change things in the first place. By the way, boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. Let me walk you through the approach you need to follow if you want to pay less taxes with an LLP. So how do you actually file taxes as an LLP? Well, first of all, as a startup with more than one business owner, you have your choice on how you want to legally structure your company. This decision actually is not to be taken lightly, because the business's structure affects how you organize your company, the registration requirements, the compliance maintenance, for instance, how you distribute income, and how you file your partnership taxes. And businesses with more than one owner can structure as a partnership, limited liability company, corporation, or another legal entity called an LLP, or even LP for that matter. So the thing is that when we talk about the LLP, everything revolves around how you structure yourself. Remember that the LPs are very popular with lawyers, with dentists, with architects, engineers, accountants, attorneys, so on and so forth. Okay, so you have that sort of popularity there, but you need to really understand that if you want to pay less taxes with an LP, you got to really structure yourself in such a way that you are taking advantage of all the various tax breaks that your LP or your business, for that matter, can really avail itself of. One thing I want to say also is that as you structure your LP, make sure that you actually look at the federal aspect of things, but also the state aspect of things. Okay, so you gotta have that duality. So you're looking at federal and state so that you are on the right side. One thing I want to say here is that you need to actually make sure that you actually have everything in writing, because when we talk about limited liability partnership, we're speaking about asset protection for the partners, right? So typically, all partners in a LLP are protected from the legal liabilities and debts of the business. However, in professional occupations, they may not be protected from personal negligence or malpractice lawsuits. So unlike LLCs and partnerships where the partners are liable for each other's activities, LP partners are protected from the other partner's liability in the LP. So once you have checked with your state's Secretary of State office for an explanation of how to form an LP and how to actually pay taxes with your LP, it's crucial to understand how to file taxes for the LLC partnership really going forward. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about how to pay less taxes within an LLP. So the thing is that if you're trying to pay less taxes with an LLP, you need to really understand that like a partnership or LLC, a limited liability partnership is not regarded as a separate entity from its owners, and therefore avoids paying the double taxation burden of corporations, okay? And so in a corporation, the company is its own entity separate from the owners and consequently pays income tax on the business's income. But the reason why I'm saying this is because if you want to pay less taxes with an LLP, you got to really not only have a great record keeping, but also making sure that you are following the rules. Otherwise, the IRS will actually reclassify whatever profits you have as salaries, for instance. The most important element, among other things, is the subject of reasonable compensation. So when we talk about paying less taxes with an LLP, you got to really have reasonable compensation for the partners who are actually actively working through the company. It's very important because the IRS just wants to make sure that you are also paying not only income taxes, but also self-employment taxes, because I mean, either employment taxes or self-employment taxes. And so the thing is that because you have the general pot, the general Social Security pot, that is actually where all companies contribute to. So they want to make sure that LLP partners actually are contributing their fair share of employment taxes as well. So the importance of the employment taxes, it's really high here. One thing I also want to say here is that you need to understand that when we talk about LLPs, we are speaking about pass-through entities. So if you want to pay less taxes, you are indirectly talking about paying less taxes at the individual level, right? So it's all about making sure that you are basically you have a great paper, like great record keeping. Of course, you got to really take advantage of all the deductions that are available to the LLP. And so it's important because the profits and losses are distributed amongst the company's partners equally per each partner's ownership share or a different division of the ownership percentage, depending on what's really on the partnership agreement. This can change, as I said earlier, can change from time to time, and you can amend it, not a problem. I want to dig a little deeper when we talk about paying less taxes with an LLP. I want to dig deeper on the topic of a pass-through entity. So in a pass-through entity such as an LLP, the company does not directly pay taxes on its profits. Instead, partners report their portion of the profits and losses on their individual income tax returns and pay taxes based on their wages. Okay, and the LLP files a Schedule K1 IRS Form 1065 to report its income, gains, losses, and deductions like a general partnership. So what happens here is that partners will file Form 1040 and pay self-employment taxes. So when we talk about self-employment taxes, I'm speaking here about what? I'm speaking about Social Security. I'm talking about Medicare. So when you talk about self-employment taxes, you have 15.3%. So 12.4 and 2.9. So 12.4 for Social Security and 2.9 rather. So you have 12.4% for FICA and 2.9% for Medicare. Okay. So in addition, the LLP needs to file an LLC partnership tax form with the states in states they have an income tax. Some states also require LLPs to pay a franchise tax, for instance, California. So it's important. Now, partners in an LLP are not W-2 employees. However, the LLP most likely will have a support staff that is W-2 employees. So the LLP is responsible for employees' federal and state payroll taxes, including income taxes. So you have a Social Security, you have Medicare and unemployment tax. And LLPs file forms 940 and 941 to report employee withholding. So for LLPs with employees in different states, the LLP must register with the state's Department of Revenue and Department of Labor to pay the payroll taxes in each state. So it's one of those things where you have additional sort of paperwork you need to really comply with. Okay, and it's one of those things where you have to really pay attention to what the rules are, because rules are different. Rules are different depending upon the state you're in, and you got to have a clear idea what kind of LLP tax paperwork you need to really file. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about how to pay less taxes with an LLP. I want to quickly talk to you about how to form an LLP in the first place, because it's important to understand how to pay less taxes with an LLP, but it's way more important to understand how to really file the partnership structure in the first place. So all 50 states have their own registration process and fees to create a limited liability partnership. So you want to start with the Secretary of State's office in your state to determine the pre-required steps and annual compliance obligations. And in all LLP arrangements, the partners should create a partnership agreement to document partners' ownership interest, profit and loss allocations, management structure, and more. Okay, and it's really important to really understand that everything is happening gradually. So before making any decision on business structure, it is crucial to weigh the pros and cons with your legal and financial advisors. And so some considerations include, although the LLP has limited liability for all partners, each state has its own rules concerning how much liability protection partners receive. LLPs are relatively easy to form, so partners file a registration form with the Secretary of State and obtain all the necessary licenses, permits, and insurance. And LLPs can grow their businesses by bringing on new partners or hiring junior partners to work for the firm. And all partners in an LLP have a say, let's say, in the management and operations of the company, okay, including how to structure, how to optimize the LLP taxes, and how to pay less taxes with the LLP. And also, one thing I want to say here is that basically, you have an LLP has fewer compliance formalities than a corporation. The LLP avoids the double taxation of corporations. For all intents and purposes, LLPs may not be allowed to expand to all states with foreign qualification. As a result, the LLP may have to form a new entity in those states. And there are typically restrictions on who can form a limited liability partnership. For example, some states may only allow certain types of licensed professionals to form an LLP. And LLC partnerships taxes include income tax and self-employment taxes. So it's one of those things where you have to have a clear idea what you're getting yourself into before actually start thinking about how to pay less taxes with an LLP. Let me give you a few pro tips here in terms of LLP taxes. And it's really important to understand that when you talk about LLP taxes, obviously you also got to think about deductions, okay? And you have to really understand that the LLPs are kind of similar to all other I would say corporate structures. The only thing is that you have to pay attention to how the LLPs is structured around the partners, okay? And what kind of partnership agreements do we have also? And when we talk about partnership agreements, we're speaking about whether the LLC is filing Form 1065 or Form 1120S or Form 1120, depending upon the kind of tax configuration that the LLP has. And remember that an LLP cannot be a single member LLP. An LLP is a limited liability partnership. You got to have at least two partners, okay? Otherwise, you don't have a partnership in the first place. So you can never have like a single member LLC. So that means what? That means that the IRS cannot really regard the LLP as a disregarded entity unless it files for, like, it doesn't actually, unless, okay, let me just restate that. So the IRS sees the LLP as a disregarded entity unless it files for a C corporation election, because S corporation election is also a disregarded entity, a pass-through entity, and same thing for Form 1065 partnership. Okay, so but the bottom line here is what? Bottom line here is that you need to really understand that you have a constellation of business tax deductions that all help the LLP pay less taxes. We're speaking about charitable deductions, health insurance deductions, disability insurance deductions. We're speaking about business vehicle deductions. We're speaking about business insurance deductions, home office deductions, tangible property deductions, retirement plan deductions, tax deductions for children. So the partners have children. If the partners have children, those are totally deductible, not a problem. I mean, not the children, but the expenses related to the children. So you also have business entertainment and business and meal deductions. You have education and expense deductions. You have longevity and production award deductions. Those are really cool. You also have subscription deductions. You have continuing education and convention deductions, and you have independent contractor deductions. So you have a constellation of deductions here. So when we talk about charitable deductions for LLPs and corporations, for example, you have donations to accredited nonprofits, sponsorship of local charity events, and providing inventory to charitable organizations. So this is kind of cool. So long story short, you have a bunch of deductions that can help your LLP pay less taxes in the end. One thing I want to say also, and this is a bonus for you, it's really important to understand that when we talk about LLP, how to pay less taxes with an LLP, this topic begs the question of what's LLP versus LLC, okay? So the limited liability company and limited liability partnership business structures have some characteristics in common, but they actually vary in several ways, okay? So I want to quickly give you a rundown of those pros and cons and give you the sort of the similarities and dissimilarities. So when we talk about the LLC, this is basically a business entity that protects owners and their personal assets from the company's liabilities. In that respect, it's kind of similar to a corporation. However, unlike a C corporation, an LLC is not treated as a separate tax-paying entity. The government taxes an LLC on a pass-through basis like a sole proprietorship or partnership. An LLC business's compliance requirements are far less extensive than those of a C corporation. For example, they do not have to have a board of directors, bylaws, and shareholder or director meetings. So that's for LLC. What about LLP? So LLP, I think I've explained to you during this conversation that basically the partners enjoy a level of protection from personal liability. The LLP is a blend of the corporation and partnership structures, giving it some potential taxation and liability protection advantages. And so an LLP is not a separate entity for income tax purposes, so its profits and losses pass through to the partners. And business compliance requirements for LLPs are kind of minimal, and this really makes it very interesting. So what are the legal implications here? Well, state laws govern LLCs and LLPs, okay? And you have legal protection for business owners. So both the LLC and LLP offer personal asset protection for entrepreneurs. However, the way and extent to which that protection applies differs. So for LLC member liability, you have a different sort of schedule. And for LLC partner liability, you have a different schedule also. For tax consideration, you have a pass-through income tax treatment. You have self-employment taxes. You also have, and this depends also on the states where you are in, okay? In terms of management structure, LLC management, an LLC has two options for how it's managed: member-managed LLC and manager-managed LLC. What about LLP management? Well, the LLP structure gives partners flexibility in their management roles, so partners can receive authority and responsibilities based on their financial investments in the business or according to their professional strengths and expertise. So to make sure that all partners agree to and understand how to manage the company and the roles and responsibilities of each partner, the LLP should have a written LLP partnership agreement in place in the first place. So long story short, everything depends upon the kind of a configuration you want for your business, whether you should go for an LLP versus an LLC. Thank you so much for your attention. I really appreciate it. In today's conversation, I'll just explain to you how to pay less taxes with an LLP. And so let me do a quick recap here. So I gave you the bonus to start with, the approach you need to follow, the pro tips. I spoke quickly about the approach also. This is really important. So thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.